Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 106 for December 17th, 2019. My name is David Kosmeter. I'm the creator of TimingResearch.com, and this is going to be the last Timing Research show of the year. So thank you for joining us. We'll be back after this one on January 2nd with a special Thursday edition of Analyze Your Trade. So, but today we will be discussing your trade ideas. So over the last few days, about 40 people submitted up to 5 symbols each. And I put the list together of the top requests. And I'm going to paste the list into the chat box right now, so you can follow along with us. We are recording this at 4 p.m. Eastern Time. And today I have arranged for Matt Buckley and Jim Kenney to be here, and Jim will be moderating. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David, and welcome to everybody for the last broadcast for this year. There's a lot going on. Obviously, all-time high seems like every day, and a lot of things are starting to accelerate a little bit to the upside. So we're going to go through some stocks, and what we're going to do also about halfway through, we're going to find out what our guest feels as far as some things that he's focused on, and also what maybe some of his views are for next year. Whiz Buckley's with us, and before we get started, many of you already know Whiz, but for the people who are just getting started here, Whiz, can you introduce yourself and a little bit more about Top Gun options?
You bet, Jim. Thanks for having me. Good working with you again. It's always a pleasure to work with a fellow 500-pound head peer. Well, I'd say I'm about 250-pound head compared to you and all the stuff you guys do up in the Great White North, but always a pleasure. Matthew Buckley, you guys can call me Whiz going forward. Apparently, I earned that call sign. For half of well, actually, until this day, my mom still believes it's because I'm smart. My dad, on the other hand, knows exactly how I earn my call sign because he sees some of the guys I hang out with and some of their call signs. So I'm just going to stick with it. It's because I'm smart. Kind of applied everything I learned flying a fighter jet after a very brief career in the airlines, 9/11, and applied it to my trading. Ended up being very fortunate to pop up on the radar of a very large, well, the largest volatility arbitrage firm in the country, headquartered up there in the CBOT, Peak 6. No offense to anybody in Chicago, great people, great food. I'm a beach guy. I need ocean. I need water. Actually, happy anniversary to me. 10 years ago, this month, we started Top Gun Options and teaching people of all skill levels to how to trade equity options. The little old lady in tennis shoes, stay-at-home moms, vice presidents, you name it. And to be honest with you, man, it isn't rocket surgery. When I went up to that 4-block radius around the CBOT, the quote-unquote smart money puts their pants or their skirt on one leg or both legs at a time like we do, man. So the smart money ain't necessarily that smart. So you guys can do it just like Jim and I can. So looking forward to it, Jim. Let's do it.
Okay. Yep. Got a lot of different stocks here today, and we're going to start out with Roku. They had a big drop down to 100. Of course, obviously, it went through the roof before then. Then it tried to come back up, and now they've got the CIO or EO or somebody who just left the firm. But what are you seeing here on Roku?
Yeah, I mean, man, first of all, I'm going to be brutally honest and upfront. I have no filter. The trading space, I don't get anymore. Jim, you probably did the same thing years ago. Netflix was like the Battlestar Galactica. That was like the lead ship. Oh my God, this thing owns the space. Now you can't swing a dead cat without hitting a content provider. I turn on my smart TV. There's like 20 of them. Now we got, Disney Plus. My oldest son got home from college the other day. I haven't seen him for 2 days. He's been upstairs watching The Mandalorian with my middle son on Disney Plus. So I like a stock that looks like this, and then I run from a stock that looks like a heart rate monitor, like at Boca Raton General Hospital, where a dude has a heart attack, lives, has another heart attack. I'd stay away from this, man. I don't like, it's like pot stocks. I don't like trying to pick a winner. I wait, and Jim, you might appreciate this. People are like, oh, when are you going to trade Bitcoin or weed stocks? I'm like, when they get options on them, the SIBO and the powers that be think they're a grown-up thing. So to me, Roku, I like you said, man, they've lost a heavy. Another guy's in charge. Any kerfluffle in the front office, I don't like, especially with the way it's looking right now and going into winter earnings. Out in February, but this is just not. this is, not to start some PETA haters here, but a little bit of a dead cat bounce, and I don't like it. Busting below the 50-day moving average. I'm not in the streaming space. Full disclosure, I don't trade this stuff because when I look at my TV, there's a lot of choices. I don't know, Jim. What do you think?
Well, I'm just saying anything that's gone up 7 times in value about in 1 year, certainly you would think that that pretty much is about it for a while, and then that 175 area seems to be a little bit of a ceiling. And like you were saying, the competition's not going away, and the company's losing money. So,
sounds like Tesla.
Stocks that, you're betting on the concept, you're betting on the future, you're betting that things will, on a come line. And sometimes that happens. And obviously, it did all year long. But ever since 176 was established as a high point last September, we haven't seen 176 since. And so that would make me concerned. A big advance. Losing money, no PA ratio, no valuation to really hang your head on. And like you were saying, if people are coming into the space, they may have a hard time competing. Well,
and folks, listen to what Jim just said. He pointed out a lot of threats to this mission if you're going to get long this. And one of the biggest threats to that is the front office, man. If you want to own the stock and you're down in the engine room, you better hope that the commanding officer up on the bridge, like 20 levels above you, has binoculars on and is like sailing this thing, and we're doing good. There's nobody on the bridge right now, and it's confusion. So for me, this would be a hold, and I wouldn't be doing anything with it. I'd wait till the dust clears, and maybe after earnings, because I'm sure when we get to SPY in a couple of minutes, I'm going to tell you what I think is going to happen in January and February. And I think you can get this thing. If you like Roku, you're going to get it at a discount in about a month and a half period. So I'm a hold to grab some popcorn.
All right. Well, thankfully, we don't have to wait too long to go over the SPYs, because that's the next one on the list, SPY. And again, it's I'm looking at it around 319 or so now. And basically, as you know, it's at a very big run, and just made all-time highs again today. And so what do we think here on SPYs?
Well, I know I like the way you trade, Jim, too, because you're like, because you can do this like with a slide rule here. You can say, hey, man, this thing's X% above the 50 or X% above the 200. We can't even, it's its own line. Look at this. Like, here's the 200-day. There's the 50-day. Obviously, this is the 0-day moving average, because that's what it is. Folks, so now let's get into it. We are way over our ski tips here. Now, let me lead with a disclaimer. And Jim, maybe you can jump in here too. I'm not your tax accountant. I'm not your tax attorney. I don't play one on TV. But I will tell you that there is, here's the big word, potential better tax treatment between trading SPY, which is, guess what, folks, an ETF, and SPX. So I'm going to kind of do who is it? Jim Kirk did with the Kobayashi Maru. I'm going to change the test. So I'm not going to talk about SPY. I'm going to talk about SPX, because you got to talk to your broker. You got to talk to people smarter than me. But I will tell you, as a matter of fact, I don't trade SPY. If there's something that has an index, you should trade the index, the RUT. Do not trade the IWM, trade the RUT. Do not, what else am I missing here, Jim? SPX, RUT, the Qs.
COMP.
Yeah, exactly. So, again, Jim and I aren't your tax attorneys or accountants, but there is potentially better tax treatment, okay? You can Google that after we're done this webinar, and you can thank Uncle Whiz and Uncle Jim about that. Now, having said that, let's get into what's going on here. If one of your tabs throughout the trading day isn't this guy's Twitter feed, you're doing it wrong. I mean, literally, let's take a look at what happened last week. Does everybody remember what happened last week when the president was on an airplane going to the NATO summit? The dude wakes up and tweets out that he's hitting Brazil and Argentina with aluminum and steel tariffs. And they're like, what? And then on the airplane over, he also hits France with, what is it, champagne, cheese, and whatever tax. This guy, folks, is literally moving the markets with tweets. Now, we all know, unless you've been in a cave for the past couple of days, what's happened. We got a phase one. Now, let me ask you, a lot of people on this brief, is there one person in this brief that believes that we have a phase one trade deal? Let's step through this. Trump Trump's been running around saying, hey, they're going to buy $50 billion in ag purchases, pork, soybeans. You know what the biggest problem is, folks? The most ag purchases China's ever done in the history of the Qing dynasty was about $23 billion in 2014. Can anybody see a trend? I mean, we're all smart people here. That's a trend. So essentially, with the president crowing all last week that they're buying $50 billion in ag purchases, it's physically impossible. So it's pretty funny because Steve Mnuchin, Lighthizer, the trade rep, kind of is like the dude at the circus walking behind the president in a white coat, cleaning up. Lighthizer came out and said, yeah, that's more like 16-ish, and it's over a couple years. Here's the other deal, and I briefed my Top Gun Options members on this last week. This was comical, Jim. Last week, Bolsonaro, and he's like, first of all, we got hit with steel and aluminum tariffs, but Trump's my buddy. But China came out and said, why would we buy soybeans from the United States of America when we're getting them from down south at a fraction of the cost? Last week, ladies and gentlemen, China actually threw capitalism in our face. So this is a long, I'm rambling here, but I'm rambling for a reason. SPY is way over our ski tips here. We got a Santa Claus rally going, and Jim can probably attest to it as much as I can. There's a good majority of time, who was it? The Bank of America, was it the fund manager? Was it the BAML, Bank of America Merrill Lynch Global Fund Manager survey? The one last month said the main reason they're piling into equities is FOMO. Right here, folks. If you, and Jim can attest to this, if you're sitting in Chicago and want to make year-end bonus and you're underperforming the S&P year to date, guess what you're doing? You are loading up the boat right now. And then guess what you do when it comes to the end of the year? You're going to dump those. But here's what I want to brief, and then we can move on, because these things are massive. You usually don't hear this in other trading places. We're going to get a Christmas present. And one of the advantages of a lot of my members at Top Gun Options is I have a pretty big Rolodex of my buddy just left the Persian Gulf. He's the commanding officer of the Abraham Lincoln, Putnam Brown, Captain Brown. He's the commanding officer of Lincoln. He's been in the news lately. So North Korea has said, hey, Donald, if we don't hear from you in like a week or two, you're going to get a Christmas gift. And the Christmas gift is going to be a ballistic missile launch. And it'll be over Hawaii, not into the water. It'll be straight Hawaii, over China. The reason I brought up Hawaii is people have a short-term memory. This market has a very short-term memory. A year and a half, 2 years ago, what was it, Jim? There was a government employee in Hawaii. Remember when they tested?
Yeah. And he thought he saw something or whatever.
Yeah. He's like, okay, I'm going to test the ballistic missile alert system. And it had this is your typical government employee. It had 2 pop-up windows like, hey, you're sending a real missile alert to this island. Do you want to do it? Yes. Next window. Are you sure? Yes. And, people for 20 minutes thought a dude actually died of a heart attack. But anyway, here's what I'm getting at. We forget that back then, when that happened, I think the Dow was down about 800 to 900 points, like in the blink of an eye. So between now and, subtle hint, my birthday, December 31st, we have a potential North Korean birthday or Christmas present, and we have this. Iran has said we are going to attack U.S. forces or troops in Iraq, Doha, in Qatar, or Bahrain between now and just fill in the blank. When we're all, whatever you celebrate, Kwanzaa, Christmas, Festivus, winter solstice, I don't care. Between now and New Year's, there are a lot of potential bad out there. So, and Jim, I'll yield to you in a second here. I know no fund man. I got a lot of family office friends, fund managers, a lot of people. Buddy at GSAM, Goldman Sachs Asset Management. I know nobody who's buying the S&P going into year end at these heights. If you do, it's for about a week and a half, and then get ready. So Jim, what are you thinking on SPY?
Well, I mean, obviously it's in new high territory. So what I've been suggesting people is until it stops making daily and weekly highs, you don't really have anything to trade against. So I would just abstain until I had some evidence that the thing had tired out. Second thing is there's a Fibonacci count on one of these guys that I watch thing that came in around 3,200. So this 3,200 area that we hit this week ballpark. I think it'll be very interesting if it can sustain itself through the end of the week. So Thursday, I'd be concerned to see if it might roll over. But again, I like to see a formation, especially on a move like this, that at least has a high surrounded by lower highs. And that would be at the minimum on a daily graph. And then, of course, a weekly would even be more evidence as well. Yeah, I mean, obviously, the stock market is not just something that goes up every single day forever. So, you know, anybody who's been around the block more than 10 times is obviously the higher it goes, it doesn't become less risky. You know?
Well, here and you. Let's
if a geopolitical event like you talk about, just imagine the order imbalance. So, you know, use your common sense. If an event of any type like that, geopolitical, occurred, that would cause selling up at these levels, the order imbalance, which would cause, you know, a fairly sharp sell-off, and you combine that with a VIX that hit 11. You got an 11 VIX. You got an extended market. You've got a situation where it's the holiday time. You got people at the end of the year who might want to lock in profits. So if an event were to occur before the 31st, the order imbalance, I think, would be substantial.
All right. I know David made you the presenter. Now I'm gonna turn the tables on you, because I want to go what you're just saying. Can you explain to people how, if something bad happens like this, and you know we're at record highs and everybody runs towards the door, if you're in an ETF, talk about trying to get out of something and how price movement works. Because I think I actually, not to plug you too much, I think, shit, man, back in 2008, I watched one of your lectures live about you talking about this very concept. And people don't understand that. They think, well, if my position goes south, I can get out of it. Can you talk about that, Jim, for a couple minutes?
Well, I think that's one of the seductions. Yeah, that's one of the seductions of the ETF market, especially on fixed income. I mean, anybody who's actually tried to buy or sell a corporate bond knows that the liquidity can be dodgy on many issues. And so these ETFs have people walking around. Well, first, the VIX has people walking around thinking, obviously, there's absolutely nothing to worry about, and that stocks are as solid as concrete. And the word valuation, they can't tell. So the bottom line is you got a perfect environment for if something did occur to cause some pretty significant pullback, because again, you are extended, the complacency is huge. And then of course, when you do try to sell out, when there's a redemption run, they call it redemption run, that means people are trying to redeem. And you know, these guys, some of these assets behind the ETFs are not highly liquid. And if you got a redemption run of size, you know, these guys are going to have to sell because they need to have the money to pay off the redemptions. And so that can create a very big liquidity dynamic. And when you do get sharp up moves and down moves, at the end of the day, it's a liquidity dynamic that's going on. There's an order imbalance going on. And with the VIX hitting 11 and where we are and the complacency and the valuations being stretched and some of the reports coming out like retail sales that were half of what they thought. And, you know, so, you know, like when you say we're ahead of their skis, what you're saying is that earnings and revenues for this year were basically flat. And now these people are forecasting that those earnings and revenues are going to be huge next year. Correct. And so that's what they call getting ahead of your skis, potentially.
Yeah. Well, that's the good point is we're actually playing catch up. So where the market is right now, folks, it's a high bar, and we're not there yet. It's like we're doing the pole vault or something like that. And we're halfway up, and it's pretty damn high that we have to hit. But you know, and I'm glad you talked about that liquidity stuff, because a lot of people don't understand. Like, well, I want to get out of this trade as people are panicking. That ain't going to be super easy. So. Anyway, let's segue, Jim. Let's skip one real quick, because I think you did a great job of talking about this as a pilot, as an options trader. And first of all, let's lead with VXX, because that is on the list. Does anybody see a trend here in VXX? Now, Jim can give you a 20-hour lecture on backwardation and contango. I'm going to give you a 30-second answer. If you are wanting to trade volatility outside of about, I don't know, 3 weeks to 30 days, you please do not do spreads. Do not do anything in VXX, period. First of all, VXX is a derivative of a derivative. So last time I was in stats or my astrophysics class, instead of trading a derivative of a derivative, why don't you trade the derivative? You know, if you think that, you know, volatility is going to pop in the next, remember, the VIX is looking at puts and calls, you know, the futures on the S&P, those puts and calls 30 days out. if you're looking to get long or short or whatever volatility, it's really tough to look outside of 30 days. So for the folks that asked about VXX, man, this thing, I don't know, Jim. Do you day trade or I don't do anything on this unless it's like a short-term, maybe weekly spread, because just this will go to, it's not going to go to zero.
No, the contango eats you alive if you have to hold it any length of time.
Correct. So folks, just know this, and Jim, I don't know the date, maybe you do, a year-ish, 2 years ago, they had to do a reverse 4-for-1 split. It went, when did they do that, Jim? Like down here in the teens and pop it back up? I forget. Yeah, so folks, guess what's going to happen in about, I don't know, maybe it's January. They're probably in meetings right now, and I'm not kidding you when I say this, that, hey, we probably in January, February need to do a reverse 4-for-1 split to get this thing back up to 40-ish. That's what happens with this thing. So whoever asked about VXX, you just put the symbol. It wasn't long or short or anything like that. Let me assume that you're thinking about, hey, man, I want to get long volatility, because that's what I would do right now. The VIX, folks, is a heart rate monitor. If you look at this thing, something freaks out, the freak out stays for a little while, it stays elevated, and then it smashes. Everything's great. Oh, no, it isn't. Freaks out, stays elevated. And then this, folks, between, mid-October and 2 weeks ago, this was probably the longest period of low volatility I've seen in years. And thank God, right there, you can ask my members, I said, we're done. That's it. We're buying volatility. This is insane. Whenever my folks hear me say the words, this is nuts, it's time to jump in with both feet. And thank God we did. We did a couple burner trades that, $7,000 to $11,000, depending on it. So don't trade VXX, folks. If you can, in the chat box, let us know what your strategic mindset is, and Jim and I can help you out. We look today at getting long some VIX out to January. I don't think between now and the end of the year, we're going to get a deal with North Korea. The guy, this is another benefit at TGO. I give you all the intel I hear from my drinking buddy still in uniform. The guy hopped on his white horse. He rode up to the top of Mount Pikachu or whatever it's called. And whenever he comes down from like the burning bush, they usually do either a big nuke test or a ballistic missile. So as Jim said a couple minutes ago, absolute perfection is priced into this market right now. And we confirm that. This is my long rambling answer to the VXX question, is the VIX is pricing in nothing wrong. And we all know that. Let me leave you with this headline. We'll move on to the next thing, is this. Whenever you see the Wall Street Journal come out with a headline like, short volatility trades are all the rage right now, or easing worries push investors out of havens, drive stocks to new highs, that's when a guy like me starts grabbing his ejection handle and looking for the exit. So this was in the Journal the other day. I remember being up in Chicago on the train reading the Journal, the cover of the Journal one day said, here comes the retail trader. And I'm like, and there goes us. So, yeah. But all right, so we tied SPY into VIX because, Jim, those are two instruments in my cockpit I will look at simultaneously. What's the market doing and what is the VIX doing? And right now, as you can see, this heart rate monitor, we freaked out over at the NATO summit, and the president 2 weeks ago, folks, said, I don't need a deal. I might wait till after the election. And now we got a phase one agreement in the span of a week and a half. So be very, very careful. I'd look to get long volatility here over the next couple. Like you said, what was your SPY top for Thursday? If it's hitting,
well, I think this 3,200 area is kind of interesting. If you blow through there, then Lord knows where it's going, because next year's target for most people is 3,400.
Correct.
So
that's their year target.
That's their year target. So bottom line is,
January.
That, you're at 3,200. Their year target for next year is already getting eaten up. But again, crazy things can happen in the market, and there could be a melt up because of a confluence of events. Lord knows. But the point is that again, we are a bit extended. Again, melt up is not off the table because things can just feed on itself, especially if certain things happen. But again, vulnerability. When you get the VIX down 11 or 12 and you get extended and there's been nothing but green lights, if anybody throws a yellow or red up there, the market is not tremendously prepared for that.
Correct. And I'm glad you listen to what Jim said there, guys. He threw out a couple instruments. If you're just fundamentals, if you're just technical analysis, if you're just trading volatility, you're doing it wrong. You need to, the aviation analogy is solid because there's a lot of instruments you should be looking at. So Jim just gave you a couple kind of canaries in the coal mine where if you look at all three, you go, okay, I'm the hair on the back of my neck standing up. If you look at just one of them, let's look at just one of them. You ready for this? Technical analysis. I mean, I was joking with Jim when I said, there's the 200, there's the 50. I don't even know what this is, the 0-day moving. Look, this is insanity. But if you're a technical trader, this is momentum, man. Come on, Whiz, why are you being all Eeyore-ish? Welcome to the party. Well, if you do fundamentals, you're looking at what? The jobs number 2 weeks ago, the Fed saying they were right. We got in the week the president got impeached, he got a phase 1 and a USMCA. Those can all sound rosy until you start looking at some of the other stuff that we all just covered, a low VIX and everything Jim just said. So when it comes to trading, folks, please don't put on blinders and be like, well, this guy says only to look at this. Well, then he's flying around in an ultralight, and that just doesn't make sense. So,
but it is nice to see some exhaustion formation where you have a high surrounded by lower highs to get some idea that the momentum has dried up, and we haven't seen that yet. So that's why you have to keep your humility at the door as far as getting too excited one side or the other. These semis have gone nuts to the upside. I was looking at the 200-day moving average on SMH and MU, and they're both in the 25% or better ballpark area as far as a percentage above the 200-day. MU looks like it's trying to take off from that 45 number, but I'm wondering out loud, is it getting a bit extended? And, you know, again, is this another situation that may be getting ahead of its skis?
Yeah, that's a great way to look at it. First of all, I mean, it's almost, I'm not Joe technical analysis, head and shoulders, triple camelback, whatever it is. I mean, this thing busted through 50 with some serious airspeed. When's the earnings? Hold on. Quote.
Well, I think people are extrapolating this China phase 1 is going to open the door for semis, you know?
Yes and no. So let's, and I'm glad we're going to talk about that because ladies and gentlemen, I do not believe that the trade agreement is worth the paper it's going to be signed on. And does anybody remember who announced it last week? On the Chinese side, it wasn't Vice Premier Li He. And on our side, well, it was a tweet. It wasn't Mnuchin, Lighthizer, Kudlow, Mr. Magoo, Wilbur Ross at a podium. This is all the second sentence or the second half of the sentence is this. Here's my take on all of this, folks. All of this smoke and mirrors was a big announcement to say that we weren't going to increase the tariffs on the 15th. Everything's still the way it was. Trump's running around and Lighthizer's cleaning up behind him with 50 billion, 16 billion. You know what the Chinese...
It could be explained as a headline distraction from the impeachment thing.
Hello, man. Wag the dog. That's exactly right. You and I remember I was flying over Iraq and I remember emailing my wife, Susie. I'm like, did you hear what happened on the news? She's like, what are you talking about? It's all impeachment. So whenever Bill Clinton allowed us to, which was rare, to lob some bombs at people who were shooting at us, it was, what did the Republicans do? To their fault, they did what? The same thing Jim just said. It was, oh, you're doing this because you're being impeached. You're attacking Iraq to rally Americans. I'm like, hey, man, we're getting shot at. So, but here's what I'm getting at, folks, is this went from, 2 months ago, hey, Xi and Trump are going to meet in Santiago and sign a phase 1 thing, and then Santiago literally caught on fire. Now it's a tweet and kind of the Chinese saying, hey, things look good in principle. I'm like, that's not anything. So when you're talking about, let's get back to the topic at hand here, the semiconductors, this is I got to be honest with you, I think it's a little bit of a short squeeze too, because I know a lot of dudes who didn't think that Trump was going to do or thought that he was going to do the 15 tariffs and have gotten caught short. So I don't trade the semis too often, but I know what's going on in them. And also remember with the semis, China, ladies and gentlemen, controls 35% of the precious metal, the iron ore and the stuff that's in your cell phone, in your laptop, everything you're using to look and hear us right now, China owns a little piece of that. And remember at the height of this trade war, back and forth broadsides between two, wooden ships, do you remember what China said? They said, we're going to stop exporting these things. And they also, and they haven't done this since, but does anybody remember they actually named a stock that they said, hey, if this trade deal gets worse, you're the first casualty. And it's that stock. I mean, the thing's up 70% year to date, but ladies and gentlemen, does everybody remember the Chinese, they actually named, I forget the name of the list, like the anti-Chinese stock list or whatever they said was like, if this trade deal gets worse, Apple, you're the first one to go. I mean, you're using 11-year-old kids to build an iPhone that you charge $1,000 for, so you're going to be gone. So very long answer to your short question. That scares me. I would not be getting long that here. And by the way, I just showed you on the screen, earnings are tomorrow, 12/18. Do not do anything in front of earnings. Sit on your hands. If you want to get bullish on this, see what the outlook is. This next earnings period is going to be very interesting because all the CEOs or CFOs got to get on an earnings call and go, we think this going forward. And it'll be interesting to hear, Jim, if they think this phase one is BS or they believe in it, right? Because, these guys got to sit in a boardroom or a whiteboard and plan for the future and sales and stuff. And if they don't believe this, we're going to start hearing it on earnings calls. So that's a little worrisome if they're not going to be on these earnings calls going, we can't believe this phase one is so awesome, or we can't believe this phase one, and drop the word awesome.
I don't know.
Right?
This thing has been so crazy. I had heard that Trump wanted to meet Xi in Iowa and sign the agreement on a bunch of
exactly.
tractors. So, I mean, it doesn't get any more bizarre. Anyway, this next one's right up your alley. You're a pilot. I have a pilot buddy who lives in my community, used to work for Delta, and he was very much thinking, that Boeing was at fault on this thing a little bit right from the get-go. We're looking at Boeing went down to that 320 mark. That's a pretty big line in the sand. It's held it so far. A lot of people think it's a buy against 320. What do you think about Boeing down here in the 320s?
Well,
break that 300 or what?
Exactly. Folks, it's magical that this thing held today. Look, there's a little drill bit. Look at that little drill bit down. Guess where it hit? Right where it hit the last time at 320. Right. This isn't rocket surgery, folks. This stuff happens for a reason. So let me start, as Jim alluded to, with the pilot part. The 4 people deserve to die. And I don't say that lightly. I say that aviation's a self-cleaning oven, and it is. The pilots in both of those crashes were awful. The one dude, you ready for this? They're so trained on the automation. Hey, as soon as we rotate and get airborne, click on the autopilot. It levels off. It starts going crazy. Hey, turn it off. Okay, it stopped. Put it back on. Oh my God, we're going crazy again. We're out of control. Turn it off. Okay, safe. Well, let's try. The guy tried 6 times to re-engage that system. And the last time they ended up being supersonic into the dirt. The victims, for the love of God and all things holy, it's horrific. So, but anyway, Boeing kind of knew that, but you ready for this, Jim? Boeing assumed that pilots would be pilots. I'm telling you, man, nearly 3,000 hours in a Boeing product, the F-18, and a ton of civilian time. When you push something in the airplane and something bad happens, you turn it off and you don't turn it on again until you land and you tell maintenance. I think it was the Lion Air one. They landed, the flight before the fatal one, they landed and said, holy crap, man, this thing, and maintenance just wrote it off. So all that aside, here's what I think about Boeing. It has a boatload of institutional support. It's a Dow component, right?
Yeah.
So as Jim knows, if I run a Dow hedge fund, you gotta own X% is allowed. This ain't going anywhere. Here's the other thing about Boeing, which is funny. When I said that China last week threw capitalism in our face about the whole soybean thing, like why would we buy them from you when they're cheaper in Brazil? Guess what China did? Because we want them to stop the Chinese government to stop subsidizing their companies. Like, you can't subsidize your companies. You know the number one example they used? Boeing. They're like, And GM, they're like, your government subsidizes companies. Why are you such a
Exactly.
hypocrite?
Where do you think
So
the defense budget goes to?
that's exactly right. And that's a good segue. So folks, 50 to 75% of military aircraft are Boeing. The thing ain't going anywhere. I will tell you, it's dead money for now. You know what Uncle Whiz is doing in his personal account is buying some long calls. It will. They're not going to, if anything, they take those 730 Maxes and do what? They sell them to other countries. If you go to Niger right now, you're going to hop on an MD-88 that was flown by Delta in the 80s. So these airplanes ain't going anywhere. There's going to be something with them. The fact that the CEO has not been seen since that shit show in front of Congress tells me that he's going to hang around, but the board's done with him. I know I'll leave it at this. He's gone soon. That, you might say, oh, crap, well, I don't want to buy that right now. The stock will go up when he gets clipped, and it's a matter of not when, but if. So, folks, listen to me. Very long answer to the short question, long or short Boeing, whatever your question is. Right now, you ready for this? And I might, wow, this is actually a triple bottom almost, Jim. Look at this.
Yeah.
Back in, I don't want to be proven wrong by saying all of the pain is in this stock, but I don't know how worse it can get with hundreds of people dead. The chief test pilot, who I've met twice, and his text and everything like that, and the guy sitting in front of the House and Senate just getting obliterated. Can it get worse? Yes. The institutional support is behind this, and guess what? There's somebody behind this that you don't have the money or the time to short, and it's the U.S. government. I would be long Boeing. Not right now. I'd wait to see. This is a nosedive.
Between here and 300 looks like the number, doesn't it?
That's it, Jim. You beat me to it. I was going to say not right now. This is a falling knife. If it holds, if it pulls out of its, pun intended, pulls out of its nosedive around 300-ish, I'd get long. If it doesn't, sit on your hands and wait for lower. But if you're sitting here, just watching your trading screen and you see breaking news, Boeing CEO resigns, I'm 99% sure the stock's going to go up, and they're going to pick somebody who's pretty damn good. So very long answer to your short question.
They also just passed a $1.4 trillion spending bill. And a lot of that's going into defense. So there you go. You got the money already allocated to do some more buying.
Yep.
But they do.
Hey, real quick,
parking lots full of planes. I got to get rid of.
Exactly. Real quick, FT Trader. It's a good point. So going back to who was it? Apple with the FT. He said FedEx has been named multiple times in like the China deal. So it's a great point. You're exactly right that China does a lot of saber rattling, but as an options trader, as a fighter pilot, you know what I do in any brief? I look at every potential threat. Some people are like, oh yeah, okay, dude, you're a fighter pilot talking about taking risk. No. Getting shot at's bad enough for launching off an aircraft carrier. We want to minimize all known risk. So if you're looking at a trade, you have to come up and sit here and say, that's a risk. Is China, folks, you have no idea what's going on in China. I don't. Xi Jinping could be talking to 20 of his lieutenants who are like, you know what? The Trump's going to be impeached, and let's really kick him when he's down. Hey, Apple, get out by midnight. And I'm not kidding you that this can happen. It's very unpredictable. So in your trading, don't sit here and stare at the screen and go, everything is sunshine and lollipops. This thing can only make money. That's how you lose money. If I walked out to the airplane, if I walked on the flight deck of the Abraham Lincoln to my jet going, I am the best pilot in the world, and this mission is going to be the best of my life. You know what, Chief? Take the ejection seat out of the airplane. I want 800 more gallons of gas. That's the day I got killed. So, folks, you're right. FedEx, and it was interesting because we talked about this in our solo Amazon service about FedEx yesterday because Amazon had a great Gordon Gekko moment yesterday. A little off topic, but you're going to love this. Amazon came out and said what? Amazon blocks sellers from using FedEx Ground for Prime shipments. I literally went over to FedEx and I sold a bear call spread out to Friday, and this thing imploded. So speaking of FedEx, this was a really good weekly bear call spread. But they came out. Did anybody see their earnings? Aftermarket.
It's not moving too much in the aftermarket, is it?
It had earnings today. FedEx.
Yeah.
Ooh. Uh-oh. We interrupt this regularly scheduled Analyze Your Trade. FedEx cuts 2020 profit forecast. Holy crap. What are they doing after hours here? Whoa, down 6%. Uh-oh. So Fred Smith is lowered. Holy shnikes. Folks, this is a canary in the coal mine. Disclosure, I flew for FedEx for 10 months. I hated it, flying from midnight to 8 a.m. This is a canary in the coal mine for the economy or just kind of the trade war. I'd love to see, when I get done, I'm going to try and find the recording of this. I want to hear what their outlook is, man. And if it's the economy, it's one thing. If they're like, well, we just don't believe the trade deal or something like that, this is a big deal, guys. A big FedEx miss with the market up here is interesting. Jim, you think anything about FedEx at all? That's pretty interesting.
I think it's either company specific or it could be something that lights a fuse tomorrow. So we'll have to see, because if the transports roll over because of this, and there's some people who lose their appetite for 3,200 on the S&P, then it'll be interesting to see.
No, and folks, Jim brings up a good point. As soon as he said company specific, write that down in your trade journal. Just because they missed doesn't mean UPS and everybody else is dying. Right. This could be we took our CFO hopped on a plane last month and went to a strip club with $1 trillion. There could be taking a whatever charge. So the devil's in the details, but this is interesting. This is, again, you're flying in a cockpit, trading in a cockpit, look at this stuff. So, wow, interesting. Okay.
Now, there's crude oil has been trying to seep up here a little bit. Aramco came out, had a great deal there, and they pawned off $2 trillion worth of their equity. We're peaking through $60 crude. There's two energy stocks on the list. Let's hit them both right now. First one's Exxon, XOM. Big dividend payer at 5%. And obviously a company that used to be much higher than this. So is there value here? Are we going to get a pop in this stuff, or is this something that's dead money?
This is, as a fighter pilot, as an options trader, in a debrief, you use the I pronoun, not we, or blame everybody else. Man, I've been in Exxon, I think a year ago, I bailed out of this thing because I've been wrong. I assumed, and it kind of proved me right around here. I love ExxonMobil. I love the company, as Jim just alluded to. Man, holy dividend payer, Batman. I mean, if you like a nice, this ain't going out of business tomorrow. I like a nice dividend, and it might go up over time. I like ExxonMobil, but to be honest with you, Jim, I was in it for everything that we covered here with Iran. But this is so my old way of thinking that I failed on in a long-term bullish trade on Exxon was, I said, hey, Iran's going to start doing the tanker thing again. It's going to flare up. What happened? About, what was that, 6 months ago, Iran seized a British tanker. And Jim's old enough to know or remember when that happened under Reagan, man, Dow's at like what, 2,500, whatever. But the markets imploded. Oil went up, $150 barrel in oil. It was insane. Why? Because that's where we got our oil. So I failed to recognize that in the past, good on everybody, 20 years, we've actually become energy independent. We're a net exporter of oil. So I failed a year ago by saying, the Gulf's going to be a shit show. Oil's going to pop. Get in ExxonMobil. Failure on my part. So I'm not big on these guys, man.
Exxon seems to be having a hard time. But the next one I'm going to mention, Schlumberger and Halliburton, they've had legs in the last month or two.
Yeah, what's Schlumberger?
SLB,
that's right.
And HAL is Halliburton, and both of them have had very good momentum. And it's interesting to see if they might get going.
You know what? When I debriefed at my members with my, shit sandwich ExxonMobil, I said, if anything, even though, because after they seized the British tanker, what happened a month later? They shot down one of our drones. The president tweet, "That's it. We're locked and loaded." I'm like, oh boy, here we go. And then he called off the attack. A month later, the Saudi Aramco attack happened, right? And 25% of the world's oil comes from right there. Nothing happened, man. I'm like, I had old me brain. I'm like, man, If this was 10, 15, 20 years ago, the market would be imploding, the VIX would be at 50. We just kind of shrugged all of those things off, right? So I have one of the wisdoms that I put out to my members is the market only cares when it cares, right? So, that we haven't cared yet. They seized a British tanker, they shot down one of our drones, and they attacked Saudi Arabia. My sources tell me that since they're 0 for 3 on the world paying attention or getting a reaction, the fourth one's going to be bad. So, and I hate trading like this, but if you think something like that's going to happen and cause oil to bump, you might look at this stuff. But here's what's Chesapeake? CHK? Do you remember?
I'm not sure. I don't
know.
know.
Yeah, Chesapeake. I used to trade before I was an ExxonMobil guy, these type of names, like you just said, the Schlumberger or the Chesapeake. I've worked with Schlumberger actually out in West Texas and stuff like that. If the main oil guys like an Exxon or Chevron, you don't like. I like the oil services industry. Was it the OIH?
Right.
Because guess what, folks? No matter what, they got to replace pipes. They got to replace this. I like the actual services of the oil industry, not the individual names. Does that make sense?
I think that makes sense. Yeah. Hey, there's a couple of payment processors on the list. Let's get to those real quick because they seem to be a little bit stalled out, and I don't know what that means. But one is Visa, which obviously is one of the standards of the consumer discretionary area. And the other is PayPal. So let's take a look at those two real quick. Visa V and PayPal PYPL. Yeah,
so Visa is a core holding of our TGO. We actually did like an iron condor the past couple weeks, 37.50 in risk that made 37.50. We looked at a bear call spread. Was it yesterday, today? Whatever it was. Having an Admiral Stockdale moment. Here's what's interesting to me, Jim, is and I tell my members, and if you're not one of my members right now, do me a favor and write these names down. You ready? XLY, XRT, Amazon, and Visa. And I want you to open your calendar, no kidding, on your smartphone right now. You're going to thank me for it. Write down on November 1st. It already happened, but put a calendar reminder in for, 2020, and make it an annual reminder. I write down seasonal trades on November 1st of every year, and I'm like, oh, geez, calendar reminder, because those things tend to go up. I mean, look at the S&P 500, man. You want to talk about a Santa Claus rally? This is one of the best. Look at October. I mean, hell, October, November.
I had heard 83% of the time it goes up during this time frame.
That's exactly right. And maybe we can close out on that in a couple of minutes. Guess what's going to happen? All these guys that did FOMO and POMO out of the Fed, January to February might be a little ugly, but let's stick with Visa. It's interesting to me because and the same thing with Amazon. Amazon is kind of maintain an even strain. If we look back at November, here's the middle of November, right here. What happened? We all gave thanks, what was it, on a Thursday, and then the next day, some people went out and beat each other up to save $10 on a flat screen. Black Friday and then Cyber Monday, Amazon reported we're the second best in like recorded history. Look at this. Amazon, where's the middle of November? Look at that. Look at Visa. Since the middle of my seasonal trade, XRT and the XLY are actually outperforming these two. But I got to be honest with you, Visa came out with the same type of reports. Cyber Monday and Black Friday. Oh my God, we destroyed everybody. I don't see it in the stock yet. So that's disconcerting for me. I love Visa long term. We're in long term trades on Visa. I mean, look at that, man. I mean, 5-year trade. Look at that. What's the 5-year return in Visa here? I love it long term, especially 171, especially, and I have to do a shot if I even mention this on this brief, but cryptocurrencies, these are going to be the guys that end up scooping up whoever it is that floats to the top. PayPal, what's a PYPL, right?
Yeah, PYPL. These guys are really a reflection of the unemployment rate. I mean, you go to 3.5% unemployment, that means people have money and they're going to use their Visa card, right?
That's exactly right. More job, and on Friday, my take on Visa would be to sit on your hands a little bit. That's what happened today. I actually said sit on your hands with Visa because on Friday we have a couple numbers that are going to impact Visa. You know what Visa cares about? Personal spending and personal income.
Exactly.
It doesn't get any more Visa-ish than these two reports on Friday. So if you're looking to get long Visa or short Visa, I'd wait until Friday to see these numbers. But like Jim just said, the jobs number from a couple weeks ago, oh my God, man, 266.
Yeah.
Insane. GDP is good. Every once in a while there's a little manufacturing black eye, but I think we're still kind of healing from stuff. We've gotten great housing numbers. The NHB, the National Association of Home Builders, 76. So things are hitting on all cylinders. I'm kind of sitting here looking at these, with the kind of like I'm old enough to say this, the RCA dog, staring at the record player. I don't know why they're not going up. They don't make sense. But I'd be, very long answer to your short question, I'd be a buyer of Visa and PayPal here for what Jim just said, man. The economy is fantastic. People should be buying, the G.I. Joe with the Kung Fu grip. And maybe it's just not reflected yet. I don't know. But I am bullet, yes, on both of those, PayPal and Visa.
Now, we've had a lot of action going on in the banks and the biotechs. That's one of the reasons why the Russell's been doing so great. So they've been on a good bicycle. You were looking a little bit towards the defense contractors, the Raytheons, the Northrop Grumman, the General Dynamics about a month or two ago, and they've hung in there pretty well. In this last bit of time here, why don't you go over some of the stuff that you're focused on, Whiz, and some things you want to share?
I like to tell my TGO members that I wear two suits at Top Gun Options. One's a flight suit. I'm going to tell you how I feel as a former naval officer, fighter pilot, as an American. And the other is a, $6,000 Armani suit of Gordon Gekko. Of course, I don't have that, and I'd kick my own ass if I ever wore something like that. But my point being is, I would be long, we are long UTX, which is going to be Mama Raytheon. So Raytheon and UTX about 3-4, how long ago was that? Whatever it was, right here, announced they're buying Raytheon. I would absolutely get long UTX. We have a couple bull put spreads on through January because unfortunately, so here's me, being Gordon Gekko. These defense stocks, and if you look at this, if you look at a 6-month chart of, for example, United Technologies, that ain't the S&P 500. The defense stocks kind of more or less ignore the trade war. You know what they care about? Actual war. I didn't cover this, but look at what just happened the other day. China commissioned their second aircraft carrier, folks, the Shandong. And I reported last January, almost a year ago, there was a very senior ranking Chinese admiral at a defense conference in, I forget what country it is in, but during the Q&A, some reporter asked him about, what are you worried about the trade war and blah blah, and the dude just kind of looked at him like a Chinese naval admiral and said, what are you talking about trade war? The only war we're worried about with the United States is an actual war and our strategic dominance in the region. Trade means nothing to us. China's in this for 1,000 years. We don't even know what we're doing for lunch tomorrow. Absolutely, I would be long. Unfortunately, so let me put my American flight suit on. I don't want these stocks to go up, man. I don't want an attack in the Middle East. But over the past couple weeks, the Secretary of Defense has been over in the Middle East. The Chairman of the Joint Chiefs publicly in a press conference the other day said, Iran, you need to throttle back with we know it's you sending rockets into American bases in Iraq. So wearing my flight suit, don't want any of that to happen. Being Gordon Gekko, hell yeah, get long the defense stocks, because if something bad happens, you're going to see defense stocks up 2-3% in a day, the VIX up about 20%, and the market down 5-10% if horrific things happen. So don't like saying it, but as a portfolio manager, put my portfolio manager hat on. You want to make money, you get long defense stocks. I don't, and here's why I'm in. It's a good, you mentioned, I think, Lockheed Martin and other ones. I don't like being too, General Dynamics or anything like that. These are too kind of specific. Boeing's also specific. It's air. I like Raytheon or UTX, folks, and here's why. Raytheon, and this is why I'm losing my hair. I sat behind a Raytheon product for 15 years. They make the radar, they make the radios, they make this. So if it's a submarine, if it's a ship, if it's a fighter jet, a cargo jet, they make the guts you look into a cockpit, that's Raytheon and UTX. The other stuff is other companies. So Lockheed Martin, you lose one contract at Lockheed or General Dynamics and the stock implodes. So this is why I've always been a Raytheon or UTX guy. I like the other defense contractors, but they're kind of, there's a potential threat, man. You get, God forbid, an Elizabeth Warren elected and she gets in office. No, this isn't a joke, folks. She goes, you know what? Those 2 aircraft carriers we have on contract for General Dynamics, they're canceled. The stock's down 20, 30, 40, %. So that's my pick, is a UTX or a Raytheon. Allegedly, the merger, acquisition, whatever you want to call it, is going well. I mean, that's a great looking chart out of Raytheon and also UTX. So don't want to be long them, but I am going to be long them because they're going to make money. And I know that we're the best trained military in the world. And if there is going to be any kicking and screaming out of Iran, they're going to pay for it. So yeah, absolutely. Long defense stocks.
Let's talk real quick before you sign off on gold, GDX. I just wanted to get your take, because this thing had a big run up from 20 up to 30, and now it's been in a range of about 26, 28 for months. In 2020, will this thing break to the upside or downside ultimately?
You know what? Here's what's
Your
interesting.
guess.
Yeah, here's what's interesting in the GDX is we had kind of this massive climb on what? Uncertainty about the trade war, and oh man, we're all going to implode and die. Now it's in a holding pattern, right? This literally is a holding pattern. The GDX, the GLD, all these type of things. In the old days, you trade a GLD or GDX as like a hedge against inflation. There ain't no inflation, right? No. And then we use it as kind of a hedge against, everything going to hell in a handbasket. Well, it seems like when things are going to hell in a handbasket, hell, the VIX ain't even getting off the mat. So this is a good, just the last 6 months of market action should tell you everything, or even the 3 months here is kind of, it's in a holding pattern waiting for potential good or bad. To be honest with you, Jim, I like trading the GLD over the GDX. The GDX is actually the miners, folks.
Right.
Yeah, I've worked down in, one of my consultants actually went down to Chile and went in one of those little like Tylenol capsules down into a mine. I worked with a company, I think it was a public company years ago. I think it was called Meridian Gold. So I did a bunch of business consulting for these guys, and they told me the same. I mean, they got union issues. There's employees, there's trucks, those big Tonka toys that look cool. They need fuel in them, so they're susceptible to oil. So I prefer, if you're looking for it as a hedge or something, everything going to hell in a handbasket, I'd prefer the GLD over the miners, just because there's a lot more stuff. And as an almost closing comment, Uncle Whiz, what I prefer the most out of this type of product is sitting in my safe, guarded by a well-regulated militia. I would own the stuff, man. I would own the physical stuff. I'm no weird tinfoil hat doomsdayer, but you got to have a little bit of the physical stuff, either you holding it or something else, because guess what paper
all the
is.
Paper currencies going around. I mean, it can't all end well with all the debt and the printing and the debt and the QE and all that. It's got to end sometime.
That's exactly right, man. I mean, Nixon and the gold standard and stuff like that. At the end of the day, if the balloon goes up, people are going to be back to trading gold. That physical piece of paper you have isn't going to be worth even the paper that it's printed on. So I'm a physical gold guy, or the GLD, and then the miners would kind of be my third pick.
All right, we're at the top of the hour, Whiz. Quick wrap up again, reminding people who you are, and of course how to get a hold of you. And if you have any special offers now, great time to shoot them out.
Yeah, you bet. So let me ask Bob's question here. He said, how far out to buy the defense stock in a situation like this? I know, buy the long calls, right? Bob, in my situation, I'm only going out. I mean, I like the defense stocks over time, but if you actually look at them, whenever we were going to do something and the president said, hey, we ain't going to do that, they pulled back, but they're still going up and to the right. Me, I'd go out to the end of January. If I was a bad guy wanting to do harm and create terror in this country, I'd probably do it around the holidays, man. Don't want it to happen. Don't, God forbid it happens. But so I'd probably go, UTX. I mean, they have they have a Jan 31 expiration, man. Maybe some cheap out of the money calls. Me personally, I like buying calls that have a little meat on the bones. I like buying some 0.8 delta calls. But if and I hate using this term lottery ticket, so I even shouldn't. But if you're looking at this as a, whoa, everything's going great right now, but I didn't even know North Korea was going to send us a Christmas gift, and I didn't even know that the Secretary of Defense has been over in the Middle East saying, hey, we're probably going to get attacked soon. If that's you, then maybe do buy some upside cheap calls. So, all right. Other than that, folks, I think our best kind of Christmas deal would be to join if you want to kind of check out what we do here at Top Gun Options, head to go.topgunoptions.com/solo. What's solo mean? We have a new service where we trade just Amazon, man, because a lot of, Jim, you could probably appreciate this. Working with a lot of retail traders, I take a look at their portfolio and they got like 33 positions, and I want to fall out of the chair. I'm like, man, I do this for a living, and that's giving me agita. I mean, so
Yeah.
if you look at a stock like if you're trading more, I don't know, 7, 10 positions and you have a full-time job, I mean, Jim and I know people that are market makers, folks. All day trade. I got a buddy who's an Apple market maker. He doesn't even know a stock market exists. He's like, dude, what the hell is the VIX or the S&P? That's all he cares about. Apple News, or analysts, man. We have analysts at research firms or big financial companies who only trade that name. So in this service, we only trade Amazon. And when you think about it, especially with this news yesterday, like, hey man, you're not allowed to use FedEx Ground. Amazon itself, if it was ever, the biggest threat to Amazon is Uncle Sam and Donald, right? If they broke up, I already predicted in about 2 years, Amazon Air will be bigger than FedEx. It's one of these, Baby Yoda has become Yoda and killed the master type of thing. So that's that's kind of our entry service here. It's only $97. I'm going out in a little bit here to take my Santa Claus pictures with my kids, and the pictures are probably going to be more than that. So for $97, folks, you can get airborne here at Top Gun Options. Check out Just Trading Amazon and what we do with that, and we'll even throw in our 3 manuals, which guess what, folks? They're $197 if you wanted to buy those on our homepage. Primary, intermediate, advanced. So essentially, I'm throwing $100 in your stocking there as a Christmas gift. But before I go, and Dave, I appreciate you having me, and Jim, good working with you, folks. If you ever seen the movie Patton or read the Patton papers, he always talked about whenever a Roman emperor entered, back into Rome after a victory, they always had a slave from one of the, defeated armies or peoples. And he stood there next to the general or the emperor returning, and he said, all glory is fleeting. So as he's getting thrown awards and people going crazy and having a big party, there was somebody always whispering in his ear like, hey man, all of this is fleeting. And I'm telling you, this is fleeting. As Jim said, 80-90% of the time we get one of these, November, December rallies. I know nobody, I talked to a lot of people who is sitting here going, hey, January 1st, I'm buying with both hands, baby. February and October are usually the most volatile months in the market. Please just get ready for a little bit of a pullback. Can it keep going up infinitely? Of course. Will it? No. So, and don't, real quick, because a lot of people are like, haha, Whiz, it didn't do it last year. Well, do you remember what happened last year? Last October 3rd was the last time Jerome Powell really did his job as the Fed chief. And he said what? He said, I am going to start let's go, right here. You can see it, October 3rd. I'm going to raise interest rates on a schedule that, we had the Christmas massacre. Steve Mnuchin, man, the Treasury Secretary, was calling Jamie Dimon and like bank heads, like asking if they needed cash, right? So October 3rd, Fed, we're going to raise rates, and then this stuff. Please don't look at this as your typical November, December, because we had a January rip your face off rally. That ain't history, man. If you look at history, November, December rallies, look at this. There it is right there. November, December rally, look at that. Right there, implosion. That was a 20% pullback. Okay, so please, even if you don't check me out or check Jim out, if you're just going to keep flying alone on your own, please hedge as the market's at record highs. Buy some cheap puts or get some long volatility. So thanks, Jim. I appreciate working for you, my friend. And if I don't talk to you before Christmas or Festivus or Kwanzaa, have a good one.
All right, you too, Wiz. Nice talking to you. Great having you with us. For people who'd like to get a hold of me and find out what I'm looking at, it's optionprofessor@gmail.com. Again, have a great holiday season, everybody. And right now I'm going to turn it over to David.
All right, thanks, guys. Great show for our last one of the year. So just a quick reminder to everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get the archive of this or any of the past shows. And just want to thank my guests again for today, Matt Buckley of TopGunOptions.com and Jim Kenney of OptionProfessor.com. Thanks, everyone.
All right, we'll
Thanks,
see you guys. Merry Christmas. We'll see you.